Please don't let me interrupt your meal. I want everyone to enjoy their lunch, but I do want us to try to stay a little bit on our time frame so that I can have everybody out of here as promised by 2. First of all, hi and welcome. I'm Gaynor Chokas, for those of you that don't know me, and I am the director for the Center for Business and Economic Development here at Georgia Southwestern. We are housed in the School of Business. It's great to have all of you here today. This is the 20th in a series that we have provided this information and an outlook to our community. I know that some of you remember when this was a 7 a.m. breakfast event. Yes, we were talking about that earlier. Aren't you glad it's not? That's how I felt. 7 o'clock in the morning. Please continue to enjoy your lunch, and we'll get started with the program. Again, thanks for being here, and I appreciate your support and your interest in our community. And with that, Dr. Patterson, I'm going to turn it over to you to do some welcoming remarks. Thank you.
Thank you, Gaynor. I am Charles Patterson. I'm the interim president here at Georgia Southwestern State University, and I want to welcome all of you to campus. I know I look around the room and I see many familiar faces and some not so familiar. So since we're at an economic development luncheon, I'll give you a little bit of background on who I am, why I'm here. It behooves me to tell you that I am, in a different role, the vice president for research and economic development at Georgia Southern University, and also the dean of the graduate college at Georgia Southern. And there my efforts are focused on how to leverage the institutional assets to move the institution forward in several different areas: research, economic development, graduate education, and really use the institution as an asset to drive economic development, workforce development. I think we have the great opportunity here at Georgia Southwestern State University to be able to do something very, very similar. Georgia Southern has an economic impact of about $860 million a year, and it's a vast enterprise. But I think some of the programs we have here, some of our opportunities and partnerships could lend themselves very, very well to improving the economic development outlook for this region. And you'll know that I am focused on how to move the institution forward, how to increase the enrollment, and those are some of the things that we'll be looking at very acutely with the cabinet, our faculty, our deans, as we move forward. So I'm very, very pleased to be here. On a personal note, my wife Colleen is back in Statesboro with our son Aiden, who is 12. They'll be in and out of the community, and if you have an opportunity on the 17th, there should be a community-wide reception, some information on that coming out very, very soon. But we'll have an opportunity for the community to come out and meet Colleen, and certainly look forward to engaging with everyone here. Thank you very much.
It is my pleasure to introduce our speaker today, Dr. Robert Bennett, and I am going to read his accolades because I want you guys to know what his background is and what I think he's going to bring to us today. But on a side note, I also want to talk about him on a personal level. Robert and I have been co-teaching our Enactus and our leadership class now for a year and a half. And I have some of our students here today who have joined us. And he may also be known for his barbecue abilities. And so we're gonna push that and advertise that a little later, because we are having our spring barbecue rib sale coming up. And so he absolutely is the best barbecue ribs I've ever put in my mouth. I will say that, Robert. So with that being said, now we get to put on the serious cap. Dr. Robert Bennett is Associate Professor of Management here at Georgia Southwestern State University. He teaches courses in strategic management, organizational behavior, money, banking, business finance, and international business. From 2001 to 12, Bennett served as President and CEO of Farmers Exchange Bank, headquartered in Louisville, Alabama, with branches in Eufaula, Clayton, and Brewton. During Bennett's tenure, the bank grew in assets from $45 million to over $200 million and added 2 new branches. The bank was recognized by the American Banker magazine in 2005 as being one of the top performing community banks in the country. He was a member of the Board of Directors for the Alabama Bankers Association from 2002 to 2010 and served as the president of the association from 2007 to 2008. Robert also served on the faculty of the LSU Graduate School of Banking for 4 years. In 2002, he was recognized for being Outstanding Young Banker of Alabama, which is a great achievement, Robert. Dr. Bennett was previously a member of the faculty of the Mitchell College of Business at the University of South Alabama. He has authored or co-authored nearly 40 scholarly publications and presentations. His doctoral dissertation on decision processes for community bank boards was presented in 1997 at New York University Stern School of Business. Dr. Bennett has been active as a consultant and has worked with dozens of businesses and not-for-profit organizations throughout our country, including all 4 branches of our military. Robert is past president of the Eufaula-Barbour County Chamber of Commerce. He was head of the Economic Development Council in Eufaula from 2011 to 2013. He also serves on the Board of Trustees for Lakeside School since 2007. He was a member of the Leadership Alabama Class 17. Robert and his wife Tara live in a historic home that they renovated in Eufaula with their sons Harris, who is 11, and Rhodes, who is 9. Robert is an avid golfer and a college football fan. I'm not going to tell you what team. And with no further ado, it is my pleasure to introduce you to Dr. Robert Bennett, one of our very own. Thank you.
Thank you very much. It's good to be with you today, and I want to thank Gaynor for changing the time of this from 7 a.m. to 1 o'clock in the afternoon because economics and eggs just doesn't go well together. That's too early in the morning to be talking about this. But let me say this, I do have a PhD, but I am not an economist. If any curves are required to explain any of this, I'll just skip all that. For many years, I was a consumer of economic information, and I'm going to take the approach today of just kind of telling you what I see as a consumer of that and maybe what the future portends from an economic standpoint. I'm reminded of a few things. In making a speech like this, you're reminded of a few things when it comes to economics. My 9-year-old son, Rhodes, whenever I have a talk with him, I try to start out with some positives. Gaynor, you teach this in communication. I say, now, Rhodes, you're a good student. And Rhodes, the 3rd grader, I said, you like athletics, and I go through all the things that he does well. And one day he stood up and he said, "There's a but coming here, isn't there?" And so I said, "Yes, there is. There's a but coming." There was a point I wanted to make with him, but the other thing I'm reminded of is it's a good thing economists, when you make a speech in a time like now, it's a good thing that economists have 2 hands because you're going to hear a lot of on the one hand and on the other hand. Right now, we're certainly at a point where there are a lot of positive things in the economy. There's a lot of things to be proud of. There's a lot of things to be excited about here in the United States, but world issues and a number of potential domestic issues could make things continue to be a little bit tough. I guess the good news is, things are going to feel a lot better than they have here over the last several years. We've had such a tough run with the economy that things are going to be looking a lot better. So just a few points. I'm not going to be able to spend a lot of time on each of these, and I might open it up for a few quick questions at the end to see kind of what your interest is. But any way you slice it, the jobs report that came out on Friday was exceedingly positive. We had 257,000 new jobs in January, but the good news is we had a $147,000 person upward revision on November and December. Let me comment specifically on November. In November, the economy created 423,000 new jobs. And when you take out things like census workers and bounce back from blizzard and sort of unusual factors, that's the best, what I would call, true report on job creation since 1997, which is a long time ago. We also created 329,000 in December, and we've created 3 million new jobs during the last year. So all that's good. Unemployment actually ticked up a little bit, but the good news is more people are back into the job market looking for jobs. And job participation rates improved. And actually income improved, which is very important, just a little bit. That's one of the things that's kind of been a down to the labor market, is that wages have not grown quite as much as we'd like for them to. In Georgia, our unemployment rate continues to be a little bit higher, but one of the good points in the Georgia economy, we were so much a manufacturing economy for many years, and since 2000, we had lost 4 out of every 10 manufacturing jobs in the state of Georgia. But we're now starting to see some of those come back, and you can probably imagine some of the industries where we're seeing some of this resurgence or renaissance in manufacturing jobs in Georgia, such as autos, aerospace, health sciences, flooring, areas like that. We're starting to see some improvement. But Georgia's unemployment rate is still 6.8%. We've seen a little bit of improvement, and we do think that overall Georgia's economy is going to be better than the national economy going forward. The other really good point is that consumers are spending and things are looking good for future consumption. There's a lot of things contributing to consumer exuberance, and it's a good thing because 60 to 70%, depending on who you ask and what market you're looking at, of the entire economy comes from consumption, comes from people like you and me going to Walmart or wherever and buying things. And so that's a big thing. And we've seen over 4% growth. Kind of your long-term growth rate there is about 3%, so that's better than average. Fuel prices are putting anything from $60 to $100 a month. For some of y'all, it might be higher, into people's pockets. And also the strong dollar, while that might be bad, I'm going to talk in a few minutes about why that might be bad for business, it's good for consumers because, if you're buying imports, obviously your dollar will go further. Now, it's going to contribute to a greater trade deficit, but the dollar is significantly stronger. The dollar, for example, versus the euro, it took about $1.35 to purchase a euro for years. And currently today, it takes about $1.13 to purchase a euro. So the dollar is significantly stronger. And that sort of points out the relative strength of our economy versus some of the other economies. So imports are going to cost less. I'll talk a little bit about China in just a second, but the overall mood of the consumer is going to be a lot better. We're also seeing slightly higher wages, and we're also seeing slightly higher hours worked. So consumers have a little bit more money in their pocket. Overall, fourth quarter GDP was 3.2%, but it might be revised, and that's a number we can live with. I always tell my students, if you've got GDP growth in the twos, and of course y'all know what a recession is, 2 consecutive quarters with GDP decline, actual decline in GDP. We're not in that kind of state, but unless you have something above 2%, 2.5% GDP growth, it sort of feels like a recession. So if we can stay above 3, that number might be revised downward slightly, but that's not a bad number. Okay, so fuel prices are low. Oil inventories, you notice they've gone back up just a little bit, but oil inventories remain very high. Production is coming down, but most economists will tell you that they'll be more surprised to see $70 a barrel oil than they would to see $40 a barrel oil. Oil is currently about $50 a barrel, so there are more economists that sort of think oil is going to be steady to perhaps even lower than they are. I know some of us sort of fear that oil may have a run up here, that oil may take off, but I don't know that that's going to happen. Oil has negatives too, and there's a lot of the economy that's related to oil. There's over $2 trillion in income related to oil, and places like Texas and North Dakota, and I'm going to mention Canada in a few minutes, are already hurting because of oil's reduction or lack of income there from overall oil. Interest rates are due to increase but should remain relatively low. I'm not going to get into a lot of detail on why interest rates I guess the main point about why they should go up is the Fed has had such loose monetary policy. We lowered rates, or the Fed lowered rates all the way to virtually zero, and then on top of that, they had about nearly $4 trillion of quantitative easing, which is basically buying bonds in the open market and flooding the economy with money. And of course, our financial system has not worked as efficiently as it should for several years, and so a lot of that money did not go to work and did not have the anticipated effect on the economy. The Fed is worried about inflation, but I think as we go forward, we're going to see that perhaps deflation, or at least disinflation, and I won't get into all the technical definitions there, but I don't know that inflation is a problem, but the Fed more than anything is worried about inflation. They have a dual mandate, as most of you know. One is to have an economy that's robust and basically at full employment. The other is to keep inflation in check, to keep prices stable. And so they have to balance. They're walking a fine line between those. And most people expect that rates will go up slightly, if for no other reason than a symbolic rate increase to show who's in charge. You're probably going to see them remove. They've used language like, we're going to be patient before we raise rates. And we're thinking that just any time now they'll drop that language. They'll just start saying that at some point we're going to have to raise rates. They stopped the quantitative easing. They were spending about $65 billion a month buying securities and pumping that money into the economy. And they stopped doing that in October of 2014. So the quantitative easing has stopped. Now most economists say there might be a half-point increase in the rates this year. I say inflation is going to be in check, and let me point this out to you. I saw a column the other day that every time there's been kind of a price reset in oil, which I think you would definitely agree that we've had, that inflation is kept in check every time. At least, since World War II, every time we've seen a major correction in oil prices, inflation has been kept in check for 3 years. So what that tells you is that we're not going to have significant inflation, if history holds, until, 2017, 2018. So perhaps we won't see the increases. Obviously, you guys recognize how difficult the economy can become if the Fed gets a little overzealous raising rates. And in the past, they have. They've gotten very consistent in raising rates. We need to hope that the Fed will be rational and reasonable in raising rates. We know that rates need to go up. Rates are abnormally low, but obviously increased rates can certainly hurt the economy. Relative to the rest of the world, the U.S. economy would almost be called a dream scenario. It's kind of like, things aren't just awesome here. There's a lot of positives, there's a lot of negatives to look at, but relative to the rest of the world, we look great. And I mentioned the jobs report. I can't say enough how positive that jobs report was. Very broad-based. Almost every job sector saw jobs increases, including finance and construction, which have typically been the very volatile sectors of our economy. Our bond markets are kind of a safe haven, so every time we think rates are going to go up, and of course the bond market works differently, so when money's flowing in and prices are going up, yields are going down. That keeps rates low. So every time we think that our bond yields are going to go up, something bad will happen in Europe, and here comes all that money back, and it drives prices up and rates down. And even with some of the turmoil we've seen, the 10-year Treasury is still trading under 2%. The 2-year Treasury is still trading just a shade over 0.5%. So rates are still very low there, and maybe the Fed can watch that and use that. Our stock market, some would argue, are overly positive. That a lot of the valuations are perhaps artificially high. And some people say the stock market will come down. We might have what we might call a mini correction. Back in October we had what we call a flash correction. It sort of came back to the previous levels. We sort of had a rocky January. It's kind of come back to the previous levels. So you might see some of this volatility in the stock market. Most experts, most economists say that we'll probably see single-digit positive returns in the stock market during 2015. But I can't say that anybody's crystal ball is any clearer than anybody else's. But most of the experts, I'm hearing some people say double-digit increases in the stock market. But we certainly, in times like this, would take a single-digit increase in the stock market. Let me talk briefly about the headwinds, and I don't want to wear out my welcome here. I hope I'm not talking too fast. You know, it's tough for an old boy from Alabama to talk this fast for very long. So I'm trying to get through all these points, and I certainly will take questions here in a minute if we need to. Much of the rest of the world would, I think the only way to explain it would be it's chaotic and volatile. In Europe, you've got a fundamental standoff between, I'm just going to go ahead and say Germans on the one hand and Greeks on the other. The Greeks elected a coalition of 13 parties called, Gaynor, I hope I'm pronouncing this right, Syriza. Syriza is the coalition, and they elected a prime minister named Tsipras, specifically for the purpose of reneging on the austerity measures that they've taken over the last couple of years to get the EU to help them with their debt crisis. And Tsipras has agreed, this new prime minister has agreed for a new round of pensions. And I don't want to be disparaging to the Greek population. I'm not one of my friends over here with a Greek surname. The Greeks have a tremendous amount of largesse, I guess is the right word, heavy pensions, heavy government employment, heavy taxation on the rich. A lot of that, I'm trying to think what else. They have, of course their economy was in bad shape. They were very much related to transportation and the cruise industry, or the travel industry. Both of those industries went into decline. But anyway, there's a standoff there between the Germans, who mainly represent Europe, and the Greeks are certainly asking for more help from the European Union. And if they withdraw from the European Union, the economic effects will be catastrophic. You could see 6% GDP decline in Greece. And of course, all this, you have contagion. When you have one economy like that, all the other economies have exposure to them through lending and other things. China has to have 7% GDP growth to be considered in a growth stage. And most of that has been debt fueled. Some people say that you think we had a real estate bubble here. I do know, I've seen stories on China having entire communities of high-rise apartments and high-rise office buildings that are completely empty. And a lot of that is debt fuel. Some people think that the construction industry there is going to be in shambles. And some people say that China's yuan has devalued greatly, which once again makes things cheaper for consumers. That's good for me and you going to buy things, but it's going to be there. I think their imports, the import number came out this morning, I think, and I want to say their imports were down like 19%, which is just incredible due to the yuan. Believe it or not, Canada could face, of course Canada is our largest trading partner, and Canada could be facing some economic headwinds. Of course, Canada is a fuel economy. A lot of their fuel extraction is related to some of these more nouveau techniques like tar sands and fracking that are more expensive. And of course, $40 a barrel oil or $50 a barrel oil does not lend itself too well to these particular industries. So we're starting to see some job losses and decreases in production there. Also, Canada is more in debt, believe it or not. Consumers are more in debt than even U.S. consumers. Canada has a debt-to-income ratio that's much higher overall than the U.S. consumer. And they also have a housing bubble. Their housing bubble has not burst yet, but it could. Of course, Russia and the Ukraine, I know y'all have all followed that. Not only is that a military and a State Department, what's the word I'm looking for, diplomatic issue, but it's also an economic issue. Their economy is in shambles. They're kind of like a dog backed into a corner. We don't know what Putin might do just to sort of shake things up and make things interesting. Of course, cyber attacks are certainly a problem. Those are going to get more common and more sophisticated, and of course, terrorism, it goes without saying. Just to kind of finalize things here, the stronger dollar has hurt business with international exposure. American goods are going to cost relatively more overseas. American companies selling things overseas, when they convert those whatevers, rubles, euros, pounds back into dollars, it's going to be less profit for them, and their products are going to be less competitive overseas. But again, it will help consumers here at home. Business spending, businesses have done quite well, but business spending, especially CapEx, we're seeing some decreases there. I guess what I'm saying is the consumer has continued to hurt a little bit, while businesses have really benefited from the QE and some of the things that have been going on to stimulate the economy. And I think we're seeing that flip a little bit. Business is going to be hurt a little bit more, maybe a little slowdown in the business sector, but the consumers are going to benefit. Some people say the consumers are going to take a step back. We certainly hope that won't be the case, but consumers are doing quite well now relative to where we've been in the past. Of course, access to capital continues to be constrained, partially by regulation. Obviously banks have tremendous disclosure requirements. A mortgage is much tougher to get than it used to be. A business loan is much tougher than it used to be because of Dodd-Frank and some other regulations. For example, banks, whenever a mortgage loan is made, there has to be kind of a sale-back provision where if there's problems with the loan, that the bank has to retain some exposure. And certainly we needed more regulation. But as the case always occurs, or as it always occurs, the knee-jerk reaction is going to be too much, and we've got to find a happy medium there. But let's see. I think I mentioned that low GDP growth isn't a recession, but can feel a bit like one. I think GDP growth will probably be in the mid to high 2s, perhaps around 3%, which we can live with that. Obviously, mid 2s is a little bit hurtful. Agriculture, this area of the world, agriculture has taken a little bit of a step back. Agriculture was really good for several years, and prices aren't quite as good. I've heard it said that cotton is very difficult to raise profitably now, so farmers are probably evaluating what's best for them there. Federal spending is certainly going to be curtailed, cutbacks. There's certainly a coalition in Washington now to see that happen. And while fiscal responsibility is a good thing and reducing the national debt's a good thing, it hurts. It hurts the economy when you have too much federal cuts, and no federal cuts are fun, but especially in an educational institution or with the military or whatever, it can be especially painful. So you heard a lot of this hand, you heard a lot of that hand, you heard a lot of buts. On balance, this is such a better economic report than what we've seen this time of the year the last, 8 years. I mean, we've had nearly a decade. In Japan, they talk about the lost decade. Japan went 10 years, and now they've gone close to 20 years without any reasonable economic growth. Japan remains in a tough economic spot. But we here in the United States are pushing a decade now. It's hard to believe that we've gone this long in such a tough economic rut. So I guess what I'm saying is, I know it wasn't all good news that I delivered today. Some people say the Fed is going to be so exuberant to raise rates that they're going to take the punch bowl away and end the party early because they're so afraid of inflation. But let's hope not. I guess the main point I would say today is by comparison, things are pretty good. It's an economy we can live with, and it's good for investment. Wages are getting better, employment's getting better, and I'm certainly hopeful that the future will continue to be bright especially here in the United States. Thank y'all. Could I take any quick questions? Anybody have any questions? Yes, sir.
What do you see happening here in Sumter County in the
Let me say first, I'm not a resident of Sumter County. I live in Eufaula, Alabama. All those towns are similar. Just talking to people here locally, I'm encouraged. I know there's been some economic development. I know in Eufaula there's been new stress put on economic development, especially with some of the economic improvement. So, I think that manufacturing increase, it's been here a couple years. We're starting to see increases in manufacturing, and I think that could be good for Sumter County. But does anybody else local want to comment on that? I think all towns this size, these counties this size, especially the rural areas, will improve. Our economy for so long was manufacturing based. And when you start losing 4 out of every 10 jobs in a decade, that can be pretty devastating. We see some of the results of that around this town. But I think the return of some of those industries and manufacturing, I tell my international business students that one thing you're seeing, all the jobs left the United States. But when you start considering transportation cost, foreign exchange costs, tariffs, all the things that go into it, and especially when you consider the productivity of the American worker, there are jobs coming back to the United States. We're starting to see a few of those jobs coming back. So that's encouraging. I didn't fully answer your question. If anybody else wants to add to the local outlook, I apologize for not being more informed on some of the specifics going on here in Americas. Other questions? Yes, sir.
What do you see in terms of technology?
You read a lot about technology education, and certainly the job growth that we're seeing, even in manufacturing. Traditional manufacturing economies are high tech, computer-aided design, computer-aided manufacturing. I know the technical schools are focusing very much on teaching those technologies. From my state in Alabama, all of the growth has been in automobiles, aerospace, biotech, computer-related industries. So, even people going into the manufacturing sector, it's just imperative that we teach them use of technology and how to apply that at the job level. But, I hope we're on the right track there. Yes, sir.
Can you comment on the hourly wages in China and how that may impact the United States and our economy and our production manufacturing?
And I hope you're telegraphing correctly here, but the Chinese worker back in, I'll call it the old days, they have no concept of a weekend there. They were working extremely long hours at extremely low wages. And, for example, Foxconn is a company that manufactures for Apple, and the people come from out in the country and live in these apartments and work, virtually around the clock on behalf of Apple at very low wages. They have learned the American lifestyle. They have learned the way the rest of the world lives. They've started making demands for higher wages. They've started making demands for better housing, for better lifestyle. I think some of that has spurred that debt-fueled bubble-type growth that we've seen. The Chinese government has said we've got to have 7% GDP growth. We're happy with 3%. But they've got to, because of the population and because of the modernizing of the population, they basically have to have 7%. It's kind of like I said, if we don't have 3% or 2.5%, it feels like a recession. If China doesn't have 7%, it feels like a recession. So there's more and more pressure for them to stimulate the economy. The rest of the world continues stimulation of the economy. We're cutting out QE, and we're getting ready to raise rates. The rest of the world is just turning it on right now, including Canada, including China, including especially the EU. Mario Draghi, the EU Central Bank president, has said, we're committed to quantitative easing, and we're getting ready to invest billions of dollars monthly into the European economy. Of course, the European economy is so fragmented. That's the problem with Europe. Some people bet that the EU is going to fall apart. When you got, and here once again I'm talking cultural here, but when you got Germans with their mentality and Greeks and the Spanish economy, they had nearly 25% unemployment, which is what it was during the Great Depression here. 25% unemployment up until about last year. I think they're down to like 18 or 19 now. But get back to your question, there's a real demand there on the part of the Chinese worker that has certainly hurt them and has helped some of those jobs come back to the United States. Further questions? Yes, ma'am.
I'm with the development authority, and I would just add local, we had about 600 new jobs last year, and about $7.5 million in capital investment in this county alone. Things are looking good for 2015. We hope it obviously continues to progress. With development authority projects, the majority of them were private sector growth, which is a phenomenal thing to see. So our community itself is doing pretty well.
Yeah, I think the bottom line is that Georgia will look generally better even than the U.S. economy. And with the caveat of agriculture, it's a little bit of a question mark right now, but especially with that manufacturing, I think that's the biggest news to take for Georgia is increase in manufacturing jobs.
That's where a majority of ours were. We do have the contact center industry that grows, but a good number of them are manufacturing.
Okay, thank you. Other questions? Well, y'all at least look like you were halfway listening and halfway interested. I know, I hope that was. You notice I didn't draw the first curve and there were no formulas and there will not be a quiz. I told some of my colleagues that there'd be a quiz, but there won't be a quiz. But y'all, I appreciate you listening today, and if you ever have any questions, get in touch with us out here at the School of Business and be glad to at least share an opinion. Thank y'all very much. Appreciate it.
I'm Liz Wilson, and I'm the Dean of the Business School here at Southwestern. And I want to echo what Gaynor said in welcoming you and thanking you for coming to our Economic Outlook Luncheon. Robert, I got to tell you a story about Robert, and he tells the same story. We had a vacancy, and we were really looking for a strong professor. And Robert had applied, and I saw his resume, and I said, this is too good to be true, a guy with all this experience, because we put a lot of emphasis in getting people that are not only academically credentialed, but also have real-world business experience, because we feel like we want to turn out job-ready practitioners. And so I saw Robert's resume and I said, this guy's too good to be true. He's been a bank president, he's been all this stuff. And, I just kind of said a little prayer, said, Lord, if he's the right one, please give me a sign. So Robert comes in, shakes my hand, and he said, I'll take the job. And I'm like, I got some powerful prayers. Well, it wasn't that, it was my picture of Bear Bryant. And Robert said, anybody that has got a picture of Bear Bryant has got to be the kind of person I want to work for. And so it has turned out to be a real blessing for the business school, and I think for this university and community as well, because Robert's been here, this is your second, third? The beginning is third year, and he's already been elected president of the Faculty Senate. He has held many leadership positions here in the university, as well as working with Gaynor to lead our Enactus leadership group to be in one of the stronger student groups on campus in terms of the kinds of things we're trying to do to connect the community to the school here at Southwestern. So Robert, thank you again Robert, I will say, is never shy about sharing his knowledge, opinion, chit-chat, whatever. He came into my office today and asked me a question. About 30 minutes later, we both said, I really gotta get moving here. So another 30 minutes later, we did. But thank you again, Robert, and thank all of you again for coming. We so enjoy working with you in the community, and Many of you represent us as former graduates, or as current graduates, I guess you were former students, in the community, and we thank you for all you do as you return back to the university. So thank you again for coming.
Well, I was trying to keep his football fan secret under the lid because I know that we have a lot of Bulldog fans here today. But Roll Tide and go Noles. I have to kind of spread our Tech and all those. But anyway, Robert, thank you so much for being here today and agreeing to share your knowledge with us. And Dr. Patterson, thank you so much for being here and welcome our guests to campus. Dr. Wilson, thank you for your closing remarks and your kind words. William Bailey, President William, thank you to Rotary for co-sponsoring this event for us. We couldn't do it without you, and so we appreciate your partnership with that. I would like to have my students stand for just a minute to be recognized, our Enactus students who are here. I want you to know that our group, I've got to brag for a few minutes, this past Friday helped Books for Sumter do a literacy and healthy lifestyle carnival for 1,500 4K through second grade students with our public school system, and it was a huge success. So I'm going to give them a little round of applause. The business leadership components that they learned, I'm sure that they will keep for a lifetime because they were good. They were good learning lessons that we got to learn. But thank you so much. And Robert, I do have a parting gift for you, so don't leave that here, especially for you. But thank you all for being here and for your interest and support of our community and for our university. And with that, have a good day. Thank you.